Okay, welcome my YouTube viewers. This was a question for December 2022 sitting. So I'll go through it. You are provided with the following extracts of the statement of profit or loss for CPA-Ratio Limited. Yeah, we have statement of profit or loss extract for the year ended 30th September from 2019 to 2022. Then you required calculate and interpret the following ratios. One is annual revenue growth rates for year 2020, 2021, and 2022. So these are you are supposed to do it. So I'll start with the 2020, 2021, and 2022. Yeah, so the revenue growth rates for 2020, this is how we do it. You say it equals, then you put a bracket. Then you start at 2020, then you subtract the sales for 2019. Then you put the bracket. Then all of this you divide by 2019. Yeah, so with this, you just drag all through. So when you drag, it will copy the formula. Yeah, and on this other, for 2021, we'll get 0.25 and 0.18 for 2022. So you just change this into percentage. Yeah, and you will have your 3 marks. That's how you are supposed to do that question. So I'll go to the Roman 2, 3 years cumulative average growth rate for year 2022. So I'll just write here 2022. Yeah, then I'll say CAG. So this is the formula for CAG. So CAG is always the end balance. So I'll say bracket. The end balance, because we are doing a 3 years. So the 3 years will start from 2020. Will start from 2020 to 2022. So my end balance here will be 2022. Then I divide by the beginning balance, which is 2020. Then I put the bracket. Then I raise this to power 1 divided by the number of periods. And here the number of periods, we are from 2020 to 2022. So these are the periods. So you have the first period, which is 2020 to 2021. The second period is 2021 to 2022. So we have 2 periods. Yeah, yet it's 3 years cumulative. So that's how you do it. You look at the period. So when it's 3 years, the period is 2 years. When it is 5 years, the period is 4 years. So I'll divide by 2. Yeah, then I subtract 1. That's the value. You'll have your that's 21.44. So I'll change it in percentage. They will give me 21.45%. So I'll go to Roman 3, effective tax rate for the period 2019 to 2022. So I'll start with 2019. And because of time, I'll go to series and I just fill. And my stock value will be 2020. And just say okay. Yeah. So this is how you do the effective tax rate. Tax rate is the income tax. You divide by the profit before tax. So this is how you do it. You just come here for 2019. I'll pick this. Then I'll divide by profit before tax. Then enter. So once I enter, I can drag all this through and it will copy the formula. And I'll change all this into percentage. And you can see all through the effective tax rate was 30%. Yeah. So that's how you are supposed to do part A of that question. Yeah, and you get your 8 marks. Yeah, you see it's not such difficult. Yeah. So you go to part B. Now assume the following for CPA-Ratio Limited. Revenue growth rates are forecast under 3 scenarios, namely best case, optimistic case, and pessimistic case. The best case growth rate for the first year forecast is the 2022 CAGR. Yeah, this is what we calculated here. This is expected to reduce by 2% annually until the last year of the forecast, subject to minimum of 15%. The optimistic case is 20% above the base case, when the pessimistic is 10% below the base case annual forecast period. So this is what we are going to do. We are told that we are to prepare 5-year forecast statement of profit or loss for CPA-Ratio Limited from year 2023 to 2027. So this is what I'll do. I just come here and I'll start with the base case and the base case. And remember, these are all growth rates. So I'll start with 2023. Yeah, then I'll just go and fill all the way to 2027. So I'll stop at 2027. See, okay. Yeah, so I'll start with revenue. Revenue is just sales. So I'll start with revenue. So revenue for 2023, we are told is the 2022 CAGR. So I just copy it. So under base case, we are told that this is supposed to reduce by 2%. We are told that to reduce by 2% annually until the last year of the forecast, subject to a minimum of 15%. So it means at 2027, it should not go below 15%. So just write 15%. So when I come to 2024, I just take this one, then I subtract 2%, I enter. Then I'll go to 2025 and pick this. Then I subtract 2%, then I enter. Then I'll go to this, then I'll pick this, then I subtract 2%, then I enter. Yeah, so I'll just reduce this into 2 decimal. So I just highlight and change, just select percentage. So when I change, the values will be there automatically, and the values will be there automatically. So I'll go to the second item. I'll come to optimistic and pessimistic case after I'm done with all this under base case, so that because it's only the base case is only affect the base case, the optimistic and pessimistic case only affects the revenue. So I'll deal with it once I'm done with the base case scenario. So I'll go to number 2 and say gross profit margin for the first year of the forecast is 3-year average for the period from year 2022 to 2020, sorry, to year 2022. So I just come here and let me work it out here. So I'll say 2020, 2021, because the 3 years, and 2022. So I'm told that the gross profit margin is the average. So I just say gross profit. It's a margin. So I just say margin. Or I leave it. It's a margin. So this is what will happen. So the margin, it means that is gross profit over sales. So I'll take the gross profit for 2020. Yeah, here. And I'll divide by the sales for 2020. Yeah, then I'll get 0.5. Then I'll just drag from now, it will copy even for 2021. So when you come to 2021, you realize that it's E9 divided by E7, which is this, divide by this. Yeah, so it's okay. So they're saying that the gross profit margin for the first year of the forecast, which is here, it's 2023, is the average, is the 3-year average for the period from year 2020 to year 22. So this is what you do. I just come here and say average. I'll now average this and enter. So I'll get this. So I'll just change this into percentage. Yeah, so it's 56.67%. So I just come here and say the gross profit. It's a margin. So I'll write here gross profit margin. Here I'll select this. Yeah, because this is for the first year. That's what you are told. But we are told that this is expected to reduce by 2% annually until the last year of the forecast, subject to a minimum of 50%. So it means at 2027, we should not go below 50%. So I'll take 50% there. Then I'll come here and say equals to this. I'll just reduce by 2% for 2024. Then I'll also reduce this by 3%. Then I'll go to 2026. I'll also reduce it by 2% and enter. Yeah, so once I enter, I'll just highlight this so that I change the into percentage, so that I'll have the two decimal points. Yeah, so you can see the changes from 56 to 54. Yeah, so I'll go to the next item, which is operating expense. So I'll just write here operating expense. Yeah, so under the operating expense, let me just increase this. So I'll do the same thing because they're saying operating expense ratios are modeled as 3 average for the period from 2020 to 2021. But these are assumed to remain constant over the forecast period. Yeah, so it will remain constant. So this is what I'll do for 2020. I'll go to operating expense and this is the value. So I'll select it and I'll divide by sales because it's a ratio of sales. Yeah, then I'll enter. So once I enter, I'll just drag the same way. Yeah, and it will copy. Yeah, but I'll find the average of the 3 years. Yeah, so I'll just select this and so I'll have this value here. So I'll change it into percentage. Yeah, so it's 19.10%. So I'll just come here and say operating expense ratio. Yeah, it's a ratio. It's a ratio. It's a ratio. So yeah, so for the first year it will be this. Yeah, but it will remain constant all through. So it means we'll use it up to 2027. There's no change. Yeah, so I'll go to the next one. Next item number 4, depreciation to revenue ratio. So I'll say here depreciation. Yeah, so depreciation, the same way, it's also 3 year. It's also 3 year. It's also 3 year average for the period from 2020 to 2022. Yeah, so this is what I'll do. I'll pick the depreciation and I'll divide by the sales 2020 and I'll enter. So when I drag, it will give me up to 2022. Yeah, then I'll come here and say equals to average. I'll average this. Yeah, so this is the average depreciation. So I just come here and say depreciation ratio will be this percentage. Yeah, so once I'm done with that, they're saying that assume to remain constant. Yeah, so it will be constant all through. So the next item will be finance costs are expected to reduce steadily as the loans are repaid. Use the reduction rate in year 2022 over the forecast. So I just come here and say finance cost. And we are using the reduction rate for 2020. And you know, this is how you do it. You come to finance cost, and for 2022, it was 8,000, but for 2021, it was 9,000. So it means the reduction rate will be 8,000 minus this. Yeah. So the reduction rate will be 1,000. So it will be constant also. Yeah, it will be constant. It will be constant all through up to 2027. So it means that the finance cost will be reducing by 1,000 all the way up to 2027. Then they are saying income tax expense is calculated as the historical effective tax rate. So the historical effective tax rate for 2022, we will use the 2022 because it's 30%. So we'll use that already. That's already calculated, but I can just say here the income tax. Then I just say 30%. I can pick any. So let me just pick the 2022 because it's the latest. So I'll pick it, yeah. So with that, I'm done with the base case analysis. Yeah, the growth rate. These are the growth rates for the base case. So I'll go now to just a minute. Yeah, we continue. Sorry. Yeah, so we continue. So we have all this. I'll go to now to the pessimistic. I'll go to optimistic, sorry. I'll go to optimistic. Optimistic case. I'll go to optimistic case. And under optimistic, it only affects the revenue. So I'll just write revenue. Yeah, so we are told, so we are under 2023. I just use these columns. So under 2023, we are told that we go to rule number 1, the optimistic case is 20% above the base case. Yeah, so it's 20% above the base case. So if the base case growth rate was 21.45%, but optimistic is 20% above. So it means that it's 20% more. So this is what we'll do. I'll just pick this and I multiply by 1 plus 20%. Yeah, so I just write the 20%. Then I enter. So once I enter, let me change this into percentage. It will give me 25.74% as the growth rate under this scenario. Just a minute. Let's see equals to. Yeah, so it will give me 25.74%. And because you can see for 2023 it was 21.45. 2024, now the growth rate was 19.45%. So I can't do individual. This is what I'm going to do. I'll click this, then I unlock all this. So this is what I'm supposed to do. Let me undo this. Let me do this. Yeah. So let me put the pessimistic somewhere. Let me put the 20% somewhere. So I'm just right here 20%. Then we also have the pessimistic, which is 10%. Yeah, so this is how you do it. You just come here and say under optimistic, the revenue for 2023, the growth rate was this, but it was 1 plus, it was 20% more. Yeah, so I'll take 1 plus the 20%. Yeah, so I'll select it and I'll lock the row. You can see the row is 40, so I'll lock the 40, the dollar signs. I'll lock it. Then this will be constant all through. So I'll just lock it completely and I enter. So once I enter, I'll have 25.74. So that when I drag, it will give me the values up to the last one, which is 18%. And if you check 18, you will realize that is G40, which is in this case is this. Is this, yeah, because they were above the base case, 40. So it's G40 times 1 plus L17, which is the 20%. So it's okay. So that's how you are supposed to do it. So I'll go to pessimistic. Yeah, because I said this only affects the revenue. So I'll just come here and say pessimistic. Pessimistic case. And I'll still applies to revenue. So I'll come here and say equals to, we are in 2023. So we are told that the Nini was 10% below the base case. So this is what you do. I'll just pick the base case, which is this. And I multiply by 1, but minus, because it was 10% below. So I'll pick the 10%. Then I close the bracket. So I'll also lock the column, the row 40. Then I'll lock the 10% completely. Because it's constant all through. So once I'm done with that, I'll just drag this all through up to here. Yeah, so I'll change this into percentage. Yeah, don't be worried about what is appearing. Yeah, so when I change it, values become automatically. So you have 19.3%, 17, 15, 13.9. So when you click this, you'll realize this G40 times 1 minus that. Yeah, so that's how you are supposed to work with the growth rate. So I'll just come here because it's only the revenue which changes. So I'll just copy under each scenario. I'll copy this. So I'll just come here and say gross profit. This does not change completely. The gross profit margin. So I just copy it. These values will remain the same. So I'll just drag this. Then I'll go to the second one, operating expense. I'll just copy that value. The same constant. I'll also go here equals to, then I'll go to depreciation. Then I'll just have the value there. Then the finance cost the same. These are constant. There was only change on the revenue. So I also come here and do the value. And the income tax will also remain constant. So I'll do the same to pessimistic. Yeah, the values are the same, so I just pick the gross profit margin. So just copy. Yeah, okay. But there's once you have copied, because it's only revenue that as a change. And the reason why I'm doing it this way is because this revenue growth will emanate from the data given. Yeah. The changes will happen from the data given. The changes won't happen from the base case. So the changes will happen from the original data given. So this is how you are supposed to do it. Now that you have this data, now you can do the focus under the 3 scenarios. So I'll start with the base case. So just come here and say base case scenario. Yeah, and this one I'll give it a yellow. I will bold it. Yeah, then I will choose the yellow. Yeah, choose the yeah. So after that, this is what I'll do. I just copy, I just come here and say from 2023, I just pick this and drag all the way to 2027. Sorry, let me undo. Yeah, so I just copy this the way it is. Copy all this. So I'll start with the cells. Just say profit after tax. Then I'll say Control C. Then I copy. Yeah, Control V. Yeah. So I'll start with the cells. So for 2023, we are told the growth rate, the area under base case. Everything is now here. So I just say equals to This equals to, I'll pick this. Yeah, the sales for 2022. Then I'll put the growth rate, which will be 1 plus the growth rate. The growth rate under base case is this one. Yeah. So as you can see, all this up to 2024 appears on row 40. So I'll lock the row, lock the row. So I'll lock the row for the interest of time, lock the row. So just come here and lock it completely. I'll lock the row. So when I enter, it will give me that one. Let me see if I drag, it will copy. No, it doesn't copy. So this is what I will do. And do. So just come here and repeat the same. I'll pick this. Then the growth rate will be 1 plus. Now I'll pick this. And I'll lock the row again. Lock it. Then I'll enter. Just say yes. Yeah, so once I enter, when I drag, it will copy all through. Yeah, so you can see the revenue has increased. So I'll go to the gross profit because that's what I've been given. So I told that the gross profit margin was 56.67%. So I'll pick this. Then I'll multiply by the sales. Yeah, so this, I'll lock this because they all that appear on row 50. Sorry, I'm supposed to use this for the base case. Let me use this. So it's not supposed to be 50. So I'll say equals to. So under gross, so I'll pick this. Yeah. Then I'll multiply by the sales, which is the revenue, because it was a margin. Yeah, it was a margin. So I'll lock the row, which is row 41. Yeah, so that when I multiply, when I enter, I can just drag. Yeah, because it will, so that when you click this, you'll realize this is D41 multiplied by D68. This is E41 multiplied by E68. Yeah. So that's what you are supposed to do. So then you come here, just equals to, yeah, we know that sales minus cost of sales is equal to gross profit. So it means that cost of sales is now gross profit minus sales. You get that. So that when you drag, you just drag on through, the values will change automatically. So we'll go to operating expenses. So I'll also pick the operating expenses. We are told that it was constant. So I'll pick this, then I lock it completely with F4. Then I multiply by, so it's a ratio of sales. So I'll multiply it by sales. Then I enter. So once I enter, I just drag. Yeah, then now operating profit will now be the sum of these two. So just equals to sum. These are this. And then I drag this all. Yeah, then depreciation also a ratio of revenue. So I'll come to depreciation under base case scenario. And I'll pick that and lock it completely because it's constant. Yeah, so that I multiply it by the sales. So once I enter, I'll just drag on. Then I'll come to profit before interest and tax, which is the sum of the two. So just say equals to sum. These are this. Enter. Then you drag on through. And then I'll come to finance cost. We are told that the finance cost, we use the last year, which is 2022. So this is what you do. For 2022, the finance cost was 8,000. So you pick the 8,000. Then I'll add, because I want it to reduce, so I'll add it to 1,000. And this is constant. Yeah, it will reduce all through. So I'll lock it completely and enter. So when I enter, it will be 7,000 as you see. So I'll come to the second year. I'll come to the second year. Let's say equals to this now plus the 1,000. And I'll lock it again. This 1,000 and lock it completely. Enter. So once I lock it, I can just drag and the values will copy automatically. So I'll come to the profit before tax and I'll say equals to sum. Then I'll just drag. Then income tax expense, we were using the historical value. So I'll just pick this and lock it completely. Then I'll multiply by the profit before tax. So when I enter, I just drag on through. Yeah, so there I just say profit after tax will be a sum of these two. Yeah, I'll have 24, then I'll drag all through. And I'm done with the best case scenario analysis. So I'll go to the optimistic case. So I'll write optimistic. Case. This is what I'll do. I'll bold this. Then optimistic, I'll give it the green color. Yeah, if you are my students, you know that at this point in time, you should now be able to make your work to be so neat. So I'll do the same. I'll just copy the years here. Then I'll drag all the way up to 2027. Then I'll also copy this. Let me just copy this here. And when you copy, you say Control C. Then you just come here and say Control V. Sorry, let me undo. Let me undo that. So just say optimistic equals 2. Yeah, then and let me copy this all through. Control C. Then come in Control V. So you have just copied that. So I'll start with cells under optimistic case. Under optimistic case. So we were told that under the optimistic case, the optimistic case is 20% above the base case. When the pessimistic, they're talking about the growth revenue. So this is what I'll do. I'll come here and say cells equals to the same way. I'll pick the original data. So I'll pick this. Then I'll multiply by 1 plus under optimistic, this is the growth rate. So I'll pick this. And you can see it's under row 49. So I'll lock the row 49 completely. Lock the row 49 completely. So this is what I'll do. Just come here and lock the row 49. So I'll lock it. Then I put the bracket. Then I enter. So once I've entered that, you can see it's now 120. It's now 120 and 18. You can see for 2020 it was 116. So you come here and say equals to. I'll pick this. Then I multiply by 1 plus. Now the growth rate on the second year, which is 2024, was now 23 point that. So I'll also lock the row so that the formula can be copied. So I'll lock the so I'll get that one. So when I drag, the values will come there automatically. So I'll go to gross profit margin because that's what I've been given. So the margin there, I say it doesn't change. So I'll pick this gross profit margin and optimistic. Then I'll multiply by the cells. This. Yeah, so unlock the row. Unlock the row only for gross profit margin. So once I lock it, I'll just drag it all through. Yeah, so when I drag, the values will change automatically. But we know that cost of sales is the difference between gross profit and sales. Yeah, so I'll get that value and just drag on through. So once drag that, yeah, the operating expenses, I'll come to operating expenses and under optimistic, the operating expenses, we have this. And I lock it completely because it's constant all through. So you lock it with F4 completely. Then I'll multiply, because it's a ratio of cells, so I'll multiply by cells. And I enter. So once I enter, I just drag. Then I come to operating profit, which is equal to sum of. So I'll sum these two to enter. So once I get the value, I'll just drag. Yeah, then I'll go to depreciation, and depreciation is growth rate is also constant. So I just come under optimistic and pick that and unlock it completely, because reason being it's constant. Then I'll multiply it by the cells. Then I enter. So once I enter, I'll just drag all through. So I'll go the profit before interest and tax, which is the sum of these two. Yeah, the operating profit and depreciation. So I'll enter, then I'll drag all through. Yeah, then I'll come to finance cost. Finance cost does not change, it's the same. So this is what I'll do. I'll pick the same, I'll pick the 8,000. I'll pick the 8,000, which is the last one. Then I'll add the 1,000, but lock it because it's constant on true. So I'll lock it with the F4. So I'll lock this with the F4. So I just come here and lock this completely because it's constant. The 1,000 is constant. So I'll enter. So once I enter, let me see if I drag it, will agree with me. No. So let me undo. So I'll do the second part. I'll pick this and add to the 1,000. Because it's reducing by 1,000. So I'll lock the 1,000 completely, the cell for the 1,000 completely with F4. So just enter. So once I enter, I'll just drag. Yeah, and it will reduce up to 3,000. So we'll have profit before tax, which will be equal to sum of these two. So I enter that. Then I drag. Yeah, then we go to the income tax expense. The income tax, which will be this, and I'll lock it because it's also constant on two. And I'll multiply by the profit before tax. So that when I drag all these other copied automatically. So I'll come to this. Profit after tax now will be the sum of profit before tax and income tax expense. So I'll copy this, enter, then I drag. Yeah, so we'll have the profit after tax. Yeah, and you can see the changes. Yeah, this was pessimistic, or base was 43, but this is now 50. Yeah, so it's above. So I'll go to, this was optimistic case. Let me just highlight it. Let me give it a green color. So I'll go to the last one, which is pessimistic. So I'll write pessimistic scenario. So under the pessimistic scenario, I'll just come and bold it. Then I'll give it the red. Yeah, something that is pessimistic, it's always give it the red color. Give it the red color. So give it the red color. So I'll let me undo. Let me bold it. Then I color it. Yeah, that's it. So the procedure continues. So we just copy the years. It's 2023 all the way. Then we'll have, I'll copy this. Yeah, because this format is all over. So I'll just say Control C. Then I come here and say Control V. Yeah. So I'll start with cells, and you say under pessimistic, we start with the original data. So I'll go to the original data for 2022. So I'll come with that. Then I multiply by bracket 1 plus the growth rate. The growth rate under revenue under pessimistic is this. Yeah, so unlock the cell, which is cell 58. So unlock it. Then I enter. So I'll come to the second one. I'll pick this, then I multiply by 1 plus the growth rate for 2024 under pessimistic, rate pessimistic is this. Yeah, so I'll also lock that cell, the same cell, 58, so that when I drag, it copies. That's the essence of locking. So I'll just put the bracket, then enter. So once I enter, I'll just drag on. Yeah. So the next thing is the gross profit margin. So I'll go to the gross profit because it's a margin of sales. So this is what I'll do. I pick the gross profit and I'll multiply by sales under now the pessimistic scenario. So our sales here are here. Yeah, but because I want this, I want to lock the cell where there's the gross profit margin. So I'll pick this and I'll only lock that cell and I enter. So once I enter, I'll just drag. Yeah, the values will be there automatically. So the cost of sales equals to gross profit minus sales. Get that value, then I'll just drag it. Yeah, so I'll go to operating expenses, which is a ratio of sales. So I'll go to operating expenses and I'll pick this. And if it was constant, so I'll lock it completely. Then I multiply by sales, which is expenses. So I'll pick this and just drag. So operating profit is the sum of these two. Pick this apart, they enter. Then just drag all through. Then I'll go to depreciation, which is also a ratio of revenue. So I'll pick the depreciation and lock it completely. Then I'll multiply by the sales. Then I'll just drag. Yeah, then the profit before interest is the sum of these two. So I'll pick this two, enter. So once I enter, I'll just drag this one. Yeah, then finance cost, I'll start with the latest, which is 2022. Then I add the 1,000. So just equals to, then I'll pick the 8,000. Yeah, the reason being it was reducing by 1,000 every year. So I'll just add, because it's already negative, I'll add, I won't subtract. That's why I'm adding the 1,000. So I'll lock the 1,000 so that the formula can be copied on it. So I'll lock it completely. I enter. So the second one, I'll pick this, then I add the 1,000. So lock the 1,000 completely. I'll lock the 1,000 completely. So it's F4. So I'll enter. So I'll just run this one too. Yeah. So profit before tax equals to the sum of these two. Then I'll drag this or then income tax expense will be equals to now the sum. The income tax expense will be the tax rate, which is here. So I'll also lock this completely because it's standard all through. And I'll multiply by the profit before tax. So that when I do that, I'll just be able to drag. So that profit after tax will be equals to the sum of this. Just drag all through. Yeah. Yeah, and we'll now have the values. As you can see, you can compare. And for 2023, the base case was the profit after tax was 24. The optimistic was 25. Then pessimistic was 24 to 63. This was 24,787. Yeah, and you can see that that's the reality. It's true. It's true that what we have done is correct. So let me just bold this so that you can see it clearly on your side. Yeah, we bold those values. I'll also bold this. I'll also bold this under base case. Yeah. Yeah, so when you find this channel useful, please subscribe to my channel so that I can reach so many people. And I can also partner with YouTube for revenue partnership. So subscribe to my channel so that I hit the 1,000 mark. Because this content is very, very important for BDA students. Yeah, so click and subscribe, like my videos so that I can reach a larger percentage. So thank you so much. That's how you are supposed to tackle this question, and you will have your 20 marks. So thank you, and have a blessed day. Have a blessed day.